I'm Terry Allen. I am a stock options nut. I hope by the end of this short video you'll have a better understanding of why I'm so crazy about options. One thing that absolutely mystifies me is why people put their hard-earned money into investments where the odds are hopelessly against them. Every day, people spend millions of dollars on lottery tickets, knowing full well that their chances of getting hit by lightning are greater than collecting on their lottery tickets. Other millions of dollars are spent every single day in the casinos. And every time the people put the bet down, they know absolutely that over time they're going to be losing 3, 4, 5% of every dollar that they bet. Actually, I can understand putting money down in the lottery in the casino. It's a small amount of money and there's a big chance that you make a big hit. But what I don't understand is when people have serious money that they want for their retirement or for the security of their family, why they put that money in places where the odds are just against them. So what do people do when they got a big bucks to invest? Stock, mutual funds, nobody looks at options, but mostly stock and mutual funds. So, you're interested in stocks, you want to pick a horse. You read an article in a magazine, sounds pretty good, so you buy that stock. But who actually buys and sells stock? The fact is that 90% of all transactions that are made on the stock exchange are done by professionals. Investment banks, institutional investors, hedge funds, mutual funds. These big guys who all read the same report that you did, plus a dozen others, plus they have interviewed the competition, customers, they've done research on the industry, they spent huge resources researching their choice of stock. And 90% of all the transactions are done by the professionals. So think about this. When you buy a stock, the chances are 9 to 1 that who's selling it is one of the professionals. These guys who know a whole lot more than you do about it. And when you sell a stock, these professionals are the ones who are buying it. Now that doesn't mean that you're always going to be wrong and they're always going to be right. But who do you think has the better odds? So let's say you're not going to buy stocks. You're going to use these professionals yourselves and buy a mutual fund. That way you get a chance to diversify, which you can't with an individual stock. But let me give you one number. 85%. 85% of mutual funds underachieve the S&P 500. 85%. So you're paying a professional manager big money to underperform what you could do if you bought the S&P 500's tracking stock, which is SPDRs. It's SPY, it's the symbol. 85% of mutual funds underperform SPY. They do it because they turn their portfolio over quite frequently and they charge fees. Your odds are hopelessly against you when you buy mutual funds. So let's look at the other alternative, stock options. I don't want to get too technical, but I do have to put a graph up here. This graph shows profit and loss in this axis and the price of the stock on the lower axis. Let's assume you have $10,000 and you decide to make a wise investment and place it in the SPDRs, the S&P 500 SPY. The stock is at $107 a share. You can buy about, let's say 90 shares. You have a little money left over. This line here tells how much money you will make or lose if you buy that stock. This profit area right here is where you make a profit if you buy the stock. If the stock goes up from 107 to 109, you make $2 times your 90 shares, $180. That's where you're up about here. If the stock goes up $4, you make $360, comes across here. Very simple. Of course, if the stock falls, you lose money, but we don't want to go there. You picked a good stock for sure. This graph here, this line here, is an options portfolio that we have used at Terry's Tips. We currently have one very similar to this under management right now. It isn't a simple line like the stock line. This you need a graphing software to figure out how your options portfolio is going to be a profit or loss at the end of the next expiration. Every single month, on the third Friday of the month, options expire. And the options that we have sold either expire out of the money, which means they're worthless, or they expire in the money and we buy them back. But anyway, at the third Friday of every month, we have to settle up. And on that day, we figure out whether we made or lost money that month. So let's look what happens in this chart if the stock doesn't change at all. It stays right at 107 in 1 month from now. Graph shows that the option portfolio is going to make about $1,200 on the same $10,000 investment. In fact, this $10,000 investment, we have set $1,500 aside in case we need to make an adjustment over the course of the month. So the stock portfolio makes absolutely zero. The option portfolio makes $1,200. That doesn't make any sense. Why would anyone ever buy the stock when they can buy this option portfolio that gets them 12% in 1 month? But the stock doesn't go up any, it stays the same. So what happens if it does go up? $2. The stock is going to make you $2 times 90, $180. The option portfolio, that makes $1,200. Again, way far more than the option, than the stock portfolio. If it goes, let's say it goes from 107 to 113, up $6. You've got $90 per share, you make $540 with the stock. You still make over $1,000 with the option portfolio. Only if the stock goes way up to over almost $115 a share, up $8 a share in 1 month, will you do better with the stock investment than you will with the option investment. Now let's see what happens if the stock falls. If it falls from 107 to 105, well, you're going to lose $180 with the stock. The option is still going to make $1,200. And the stock has fallen by $2. If it goes down from 107 to 103, down $4, you lose $360 with the stock. You still make $1,200 with the option portfolio. Doesn't sound possible, does it? Okay, there's one caveat here. If the stock should fluctuate a great deal in either direction, the option portfolio does worse than the stock portfolio. If you look at the slope of this line here, once the stock has fallen from 107 to 99, $8, which is about 8% in 1 month, you start losing money at a much faster rate with the options than you do with the stock. In the second video, I'm going to show you how to create a portfolio that gives you this kind of a risk-profit profile. In the third video, I'm going to show you how to make adjustments so that you can avoid this serious loss at this end or at this end of the spectrum. If you want to see the second video, please go to our website, terrystips.com, and sign up for a free newsletter, and you'll get access to the second video, which shows you how to create a portfolio that will give you this kind of a profit profile in 1 month.